G. Kumar, Executive Director and CFO of G Shipping, joins us now. Morning, thank you for joining us. So what is the recent US-China deal which was announced yesterday? How do you assess that, and how do you think that will impact the trade flow and the demand-supply dynamics in the shipping industry?
Morning, Nikush. Thanks for having me. So first of all, the tariff battle that was happening between US and China was mainly likely to affect the container trade, which is a finished goods trade, which is not our business. So we are in the commodities transportation business. However, it could possibly have had some knock-on effects on our business because if there is poorer trade and therefore slower growth, economic growth, that macro definitely affects demand for commodities as well. So if it settles down and we get back to a reasonable trajectory of global economic growth, then that's good for the commodity shipping business as well.
But were there any trade imbalances or disturbance which actually happened? Because we read reports which were like, first a consignment from China had reached the US port, it was not getting its entry. Are you getting a sense that the tariff, at least when it was at play in the month of April, that had an adverse impact on the entire shipping chain?
Yes, that did have an impact. And again, this is from what we are reading and not from our experience, because as I said, we are not in that business. But we've also read that a lot of the cargoes got rerouted towards Europe, and therefore congestion actually built up a little bit in European ports because of cargoes landing up in Europe rather than going to the US. But again, this is information that we've read from public sources, not from our own experience.
All right. Hi, good morning, Mr. Shivkumar. This is Shrishti also joining in. But what happens to the prices? Because, well, of course, in the recent while with respect to what's been happening related to tariff, we do believe that the prices did take a hit. But now, do you see your break-even rates going higher from these levels?
Morning, Shrishti. Again, we're not in the container ship business. So we don't know what's happening in that market, and we won't really hazard a guess beyond a point. You can see, but the impact of this deal on the sentiment, crude oil prices, which had dropped to around 60, Brent crude, which had dropped to around 60, has bounced a bit now, going up back to around $65 per barrel. So in general, it appears that it will be good for the economy itself and in general for demand for commodities.
All right, and along with that, the segments that you are in, that is providing tankers for crude, product tankers, LPG and dry bulk, among these, which are the segments that you believe that can show the most traction, which are growing, which have the more stronger growth potential versus the other in the quarters ahead?
So the one where the cargo situation is looking best is on crude tankers. In the last couple of weeks, OPEC has announced that they will be increasing production, and they've been voluntarily restricting production, right, to prevent the market from getting oversupplied with crude oil. They've said that they'll be increasing production by 400,000 barrels a day next month and by another 400,000 barrels per day the month after that. More crude oil into the market is always good for the tanker business, because once it comes into the market, it starts moving. So that's one where at least the recent developments have been very positive. So that's one sector. On the demand side, it's tough to tell. At least now, one risk factor, which is on the global macro, hopefully is getting removed with these deals which are getting struck on the tariffs. So at least that demand side worry should go away, and maybe we'll get back to a normal trajectory of oil demand growth. But this is just one factor that we can quote as being a positive news flow in the last couple of weeks for crude tankers.
All right, Mr. Shivkumar, also, could you provide some clarity on the rig repricing in the offshore business? What's been happening there?
So pricing in a recent 3-year contract. So the standard contract in India is a 3-year contract, a 3-year fixed price contract. Pricing in those contracts has dropped off significantly. Sentiment was affected by the actions of a very large international customer, Saudi Aramco, around this time last year, where they terminated or suspended contracts for 16 or so rigs, and then further terminated another 8 or 9 rigs, so making a total of 24 or 25, which meant that a lot of rigs came back into the market. So sentiment was affected then. Till then, the markets had been going up steadily between 2021 and 2024. As a result of that change in sentiment, pricing has dropped off very significantly in the for the 3-year contracts. For the short-term contracts, and we have landed a couple of short-term contracts, pricing has not come off that much. Again, because these are not really comparable with long-term contracts. So pricing has not come off that significantly for the short-term contracts. Again, there's not really a comparable because you don't get too many short-term contracts in the Indian market.
All right, and also Mr. Shiv Kumar, is the industry finally seeing some stability in the Red Sea operations, or do the challenges still persist? Give us some sense on that.
Yeah, while we've had announcements on stability in the Red Sea, we don't yet see much increase in transits through the Red Sea. We ourselves are not transiting through that area. And that's been the case now since end of 2023, when the trouble started. So it's probably too soon to tell. People still don't have the confidence that this is going to be a safe transit. And so not many people have returned to that region.
Okay. I just want to broadly understand in terms of the shipping capacity in the world, really at a broader level. If crude prices remain benign, which is what they are, and it appears that in the near term, crude will remain under pressure, at least that's the stated intention by the US administration. OPEC is looking at pumping more oil, Russian oil will come. What happens to your business? I mean, is there a direct correlation between oil prices and the wet cargo, is called them, right? Wet cargo?
Yes, that's right. So good question. The correlation is between the amount of oil in the market, which is supplied into the market, and tanker rates, not so much with the price of oil. So if more oil is supplied into the market, so let's just take a scenario where OPEC pumps 1 million barrels a day extra. Once it's pumped out by OPEC, it has to go somewhere. And the way it goes somewhere typically is by a tanker. So that means more demand for tankers when more oil is pumped out. And therefore, that is positive. Now, what happens when there is an oversupply of oil is that the price of oil falls. And therefore, you have a negative correlation in that scenario, between the price of oil and tanker rates. So if the price of oil is driven by excessive demand, then prices can go up and rate for tankers can go up. If the price of oil is driven by excessive supply, then price of oil will go down and tanker rates will go up. So the correlation is with the supply of oil, the amount of oil which is supplied into the market, rather than the price of oil itself. And again, if you have a contango structure where the spot prices are much lower than the forward prices, there is an incentive to buy spot and store. Again, this last happened when COVID struck, where you had a significant contango which paid for the storage cost. We are nowhere near that, but that's something else that can happen if the market is oversupplied in the short term.
All right, Mr. Shiv Kumar, with this, we let you go on that. Thank you so much for taking the time out and speaking with us this morning.
If you like this video, then like, share and subscribe to ET Now.